Well, good morning. Today I have with me Karli Spahr with Fairway Mortgage, and she's going to tell us all about doctor loans and Fairway Mortgage itself and what she can do. She's very experienced with regards to mortgages, and I've been very, very happy to work with her, and that's why I'm bringing her on today. So, Karli, can you tell us a little bit about yourself, your company, and then we'll dig a little deeper into the actual products that we're going to talk about today.
Sure. So my name is Karli Spahr with Fairway Independent Mortgage. I have been in the industry 24 years now. Been with Fairway 3.5, and Fairway's been around since 1996, so we're just celebrating 25 years. We are an independently owned lender, and actually hit over 10,000 employees. So we're nationwide, all 50 states. And we lend directly with Fannie, Freddie, HUD, VA, the physician loans. We have investors for that. So there's a variety of programs that we can tap into, and we underwrite everything ourselves in-house.
Awesome, awesome. Now, I think you're also the biggest FHA lender, aren't you, in the country, or at least one of them? I know we're talking about doctor loans today, but I just thought I'd mention that if that's true.
So I have everything written down, but we were the number 3 purchase lender last year in the nation, and that's including banks. So that's a really great achievement, I think. We are also up there for VA, number 1 USDA, FHA. I think we were the number 1 purchase lender for FHA. So we have hit a lot of top categories, which is really, really great. I'm very pleased to be with this company.
Awesome, awesome. Yep, I've been very pleased with Fairway as well as one of my lenders, and again, that's why Karli is here today. So, Karli, can you tell us about the doctor loan, how it might work? I had a transaction with a doctor that utilized a similar program. I think yours is better, but I'll let you tell us about it and how that loan works specifically for a doctor.
Yeah, so we actually have a variety of physician loans available, and it's not just for doctors. I mean, it can be for um, people that are in residency, which is a big piece of the puzzle. Usually, people in residency aren't
Mhm.
making a lot of money, have a lot of student loan debt, so it helps out with that. Also for veterinarians, dentists, ophthalmologists, orthopedics,
Oh,
chiropractors. So there's a wide variety of the medical profession field that we can work with on those
I didn't
programs.
realize it expanded like that. That's fantastic.
Yeah, and we do have a variety of down payment options. So usually the issues surrounding physicians is when they're coming out of college or residency, still in residency, they just aren't making enough money to cover the student loan debt the way a normal loan has to count that debt. So we can look at student loans differently. We can also do very low down payment options, and in some cases, no down payment.
That's fantastic.
Mhm.
So no down payment on a doctor, even though they're not a veteran and not USDA, you can still do something like that.
Correct.
Wow. Okay. And how do you, I mean, let's say they come out with a couple hundred grand of student loan debt. How might that be factored into the underwriting? I know, like we all know, you have your residency and maybe you're making 50 to 75, and then you're making, 100 to 500 or whatever the number might be. So how is that factored in, I mean, to that underwriting equation?
Yeah. So when it comes to student loans, it really depends on the program because there's so many different programs available. So credit score is going to be a factor, ability or down payment. So they all count them a little bit differently. But for the most part, the general rule of thumb is we can exclude a lot of times the student loans completely when they're in deferment. So people that are in residency usually have their student loans deferred for a period of time. So not in forbearance like things are happening right now, but deferred because they're still in school or completing residency or fellowship.
Awesome. Awesome. Now, if somebody wanted to get pre-approved and find out, because they may talk to a regular lender and the lender is going to say, well, you're not making enough. You've got, too much debt or too much this. And with the housing market increasing it, the way it's been, I mean, if they wait 3 years, it might cost them, 30% more on a house when they could have bought had they known about this program. So how should somebody, yeah, initiate the conversation with you so they can at least find out their options?
I think really is just having that initial conversation. And a lot of times, just from that upfront, we can figure out if it's something that we're going to be able to help them with or not. And if we can't, what do we have to do to make the puzzles fit together? So we'll help give them steps to be able to qualify. So sometimes people, might have made some wrong turns in terms of choices in college with credit, and we can help, get them from A to B there. Maybe they need a cosigner. Maybe it comes down to the student loans and we have to get a little more documentation on that. So we can give them guidance to get them there.
Awesome. Is it an agency loan like a Fannie Freddie or FHA, or is this a, proprietary product? And can you tell us a little bit more about that?
All of the above. So we have a variety of products. So I've had some physicians where they thought they needed a physician loan and, trying to fit in this box, but there's another product that fit them much better and have better rates, better PMI, whatever the case may be. Sometimes one product is better for a person than another. Also depends on the price range they're looking at, what state they're looking in. So, we work with people in a lot of states as well.
Nice. No, I'm in Minnesota and I'm in Edina. I service the entire metro area, within 50 miles. But you're not. I mean, you're in Minnesota, but I mean, you can do loans. If a doctor is watching this right now and he or she's in Texas or Wisconsin or another state, they certainly can reach out to you, correct?
Correct. Yeah.
Okay.
So myself, I'm in Washington, California, Arizona, Texas, Florida, trying to hit all the warm states, Iowa, and Wisconsin and Minnesota. But we do service all 50 states. So if somebody were, say, relocating out of Minnesota somewhere else and it's not one of the states we service, I can put them in touch with somebody who can within the company so that they can get a physician loan.
Okay, and the physician loan, can that follow them? So for example, if they're in Minnesota and they want to maybe keep their property here and then move to another state and they've already used the physician loan, can they use it more than once, or do they have to pay that one off in order to initiate again, or is it just depends?
If they're relocating and depending on the circumstances, yeah, they can use it again.
Okay, awesome. And how much does it cost to talk to you about this program?
Nothing. No
Okay.
cost to have a discussion, not at all.
All right, so give you a call, reach out to you by email, say that they want to learn more about it. And it's not just doctors. Like you had mentioned, and I didn't know this until today, that it's not just a regular, I'm going to say medical doctor physician. It covers anybody and that's possibly in the medical field. Is that correct?
Correct. Yeah.
Wow, what a deal. So everybody should find out about it and not defer home ownership, especially in a rising market. Are the rates similar to prevailing rates? Or are they lower, or what kind of a rate are we looking at in term on the loan?
There's a wide range of rates. It depends on the down payment and the type of product they choose and how much they're borrowing, because someone at $1.5 million or more the rates are going to be different than 300,000, for example. But I'd say in some cases they're lower than regular conventional rates, and sometimes they're a little higher. So it just depends.
Okay, and that was a question I had too, was about size. So like, some of the government programs have like a jumbo or non-jumbo. Is there a size, a minimum and a maximum that you typically can do on these types of programs?
Yeah, you know what, I don't see the caps as much in Minnesota as we do in, say, California, for example, but I believe it's 1.5 million is the cap on some programs. It's just that the down payment will change
Okay.
when you go over certain loan amounts. So
Okay.
around here, generally don't see people hitting over that when they're in the stages where they need these physician loans.
Okay, and like the PMI or private mortgage insurance, is that a function on these loans, or is it built into the rate? How does that work?
In a lot of cases, there's no PMI, even with no money down.
Wow, what a huge deal. Okay, well that's a monster. Well, wonderful. Well, Karli, why don't you tell everybody again? We're going to put it in the information below in the video, but tell everybody how they can reach you both by phone and email, and then we'll wrap this up.
Yeah, so you can reach our team at 651-888-8180. for a phone number. You can call and text that number. And by email, you can reach out to Team Spahr. So that's Team S like Sam, P like Peter, AHR at fairwaymc.com. And like John said, he'll have the contact information for you as well.
Awesome. Well, Karli, thanks for coming on today. All you medical people, I'd love to sell you a home, and Karli'd love to finance it. So hopefully we'll talk to you soon. Thank you.
Thanks for having me, John.
You bet.